Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 17th of August 2019 and we're providing our gold and silver weekly update for the weekend in the 16th of August. We shall also be commenting on the volatility of gold and silver prices this past week, what has happened to cause this, and an issue of potential concern towards the end of the video which could cause their price to move up quite rapidly. Gold rose $17 last week from $1,496 to $1,513, having hit a high of $1,535 and a low of $1,480. In sterling terms, gold finished the week at £1,246, that's up £2. And in euros it closed at €1,363, that's up €28. Silver rose 14 cents, from $16.97 to $17.11, having hit a high of $17.51 and a low of $16.54. In sterling terms, it closed at £14.09, that's down 2 pence. And in euros, it closed at €15.42, that's up €0.28. The gold to silver ratio rose slightly from 88.2 to 1 to 88.4 to 1. The Dow Jones closed on Friday at 25,886, up 306 points on the day, but down 401 points on the week. And the Nasdaq closed at 7,895, up 129 points on the day, and down 64 points on the week. And the S&P 500 closed at 2,888, up 41 points on the day, but again down some 30 points on the week. Brent crude rose just 11 cents, from $58.53 to $58.64. And US light crude rose just 37 cents, from $54.50 to $54.87. The dollar index, though, stands at 98.14. That's up 0.65 on the week. Another fascinating and topsy-turvy week for our favourite precious metals, gold and silver. Whilst the gold price began to dip on Monday, we saw a rapid rise, and then decline on Tuesday, a rise again on Wednesday, which held until Friday and then fell back again. The week was interesting in that we saw the US announce, 1, that it would do a favourable trade deal with the UK post-Brexit, 2, that the increase in tariffs on Chinese imports would in the main part be delayed until December, 3, for the first time in over 12 years, long and short-term rate yields inverted, which many forecast as a precursor to a relatively imminent recession. We produced an in-depth video yesterday specifically on this subject and placed a link to it in the description box below. And 4, we also saw some good economic data news in that both retail sales and retail sales ex-automobiles exceeded expectations. And productivity from quarter 2 came in at 2.3%, above the 1.7% expected. Though admittedly on the downside, industrial production for July was down minus 0.2%, and the consumer sentiment index for August fell to 92.1 against expectations of 96.8. It was also interesting in that we saw the Dow fall some 800 points on Wednesday, when the inverted yield curve became apparent, though it recovered some 100 points on Thursday and 306 points on Friday, though, as mentioned, still down some 401 points on the week. The result of all this news was to see the gold price move between a low of $1,480 and a high of $1,535, some $55 or 3.7%, and silver in similar unison between a low of $16.54 and a high of $17.51, some 97 cents or 5.8%. So despite the fallback in price of gold on Friday from Thursday's 6-year closing high, partly because the Treasury 30-year yield reached an all-time low and the 10-year yield surpassed that of the 30-year yield, thus the inversion, it still managed to rise by 1.2% on the week. From a technical point of view, support is seen at the 10-day moving average of 1492, just below the psychological 1500 level. And short and medium-term momentum is positive. That said, the good economic data and, to be frank, the continual strengthening of the US dollar, despite potential future rate cuts, will, in our opinion, push gold prices down closer to the 1450 level. That said, we are not blinded to the fact that next week we have the FOMC minutes announced on Wednesday, and the Fed chair will be speaking at the Jackson Hole Symposium on Friday. So both of these will give markets, hopefully, a further indication of how dovish or hawkish the Fed is likely to be. We particularly wish to point out to our listeners that whilst the pumpers will paint the story, which in itself is not wrong, that lower interest rates favours gold and silver prices, as the opportunity cost of holding them diminishes, it can also in certain circumstances favour stock markets. And frankly, if we are to see a resurgence, and we mean a serious resurgence in gold and silver prices, then we really do have to see a major fallback in the equity market. Our conclusion is that this Trump administration will do all that it can to ensure a buoyant stock market, and certainly well into 2020. And only if it fails will those hoping for a significant capital gain in the value of their gold and silver holdings be satisfied, at least in the short term, as we're all very positive about it long term. Now, of course, our proverbial black swans and potential geopolitical conflicts can also have an additional bearing. Silver markets, as mentioned earlier, were much more volatile than gold, though moving in similar directions. There is significant support at both the $16 and $16.50 levels, and weak support at $17. And volatility is again the key word here. Any market anxiety or disturbance could indeed see prices move past $17.50 again, and possibly touch $18. We have, in fact, amended our high for 2019 to $18.50, whereas our start-of-year calculation set it at $17.50. Though again, as with gold, we believe that silver is currently overbought, but perhaps not as much. And all things being equal, expect to see some pullbacks towards the $16.50 level. Now, apart from the FOMC minutes on Wednesday and Jerome Powell speaking on Friday, the only other economic data to be announced of some import are existing home sales for July to be announced on Wednesday, market manufacturing and services flash PMI for August announced on Thursday, and new home sales for July announced on Friday. Now, the one area that could throw all of our calculations out of the window, and one which we have mentioned a considerable number of times these past couple of months, is Iran. Yes, China has a major significance, but so too does Iran. Last Tuesday, we published a video entitled, "Is a UK-US trade deal actually a trade-off?" Now, we've put a link to this in the description below. In truth, this video did not get that much attention from subscribers. In it, we pointed out that British Prime Minister Boris Johnson and US National Security Advisor John Bolton met together and agreed in principle a favourable trade deal post-Brexit. But we added there was a quid pro quo. Now, perhaps we were being a little too circumspect or secretive, but ask yourself the question, why is the National Security Advisor negotiating a trade deal or even discussing it? We quoted in the video as follows. Mr. Bolton also referenced Mr. Johnson's willingness to participate in Operational Sentinel, which aims to beef up the military presence in the Gulf in the face of tensions between the West and Iran, saying he was pleased as this reflects a change from the prior government, unquote. We all know the British have had their issues with Iran lately, and of course John Bolton is one serious hawk where Iran is concerned, and the military have been moving ever closer. Well, just a couple of hours ago, it's been reported that the US has issued a warrant to seize a detained Iranian oil tanker, Grace 1, a day after a judge in Gibraltar ordered it to be released. The Grace 1 supertanker, which is carrying 2.1 million barrels of oil, was detained on the 4th of July on suspicion of illegally transporting oil to Syria. 2 weeks after Grace 1 was detained, the 19th of July, Iran seized the British-flagged tanker Stena Impero in the Strait of Hormuz. Although Iran claimed the ship had violated international maritime rules, the seizure of Stena Impero was widely believed to be an act of retaliation. A last-minute legal attempt by the US to keep the tanker detained was rejected by Gibraltar on Thursday. But yesterday, a federal court in Washington called for the tanker and the oil on board to be seized. It has also ordered the seizure of $995,000 from an account at an unnamed US bank linked to Paradise Global Trading, LLC, an Iranian company. The Justice Department said the ship and the firm had been involved in violations of the International Emergency Economic Powers Act, bank fraud, money laundering, and terrorism forfeiture statutes. Now, it is quite likely that neither the UK or Gibraltarian authorities will act on the federal court ruling, but the issue is these increasing tensions between Iran and the US, and now the UK. On the 23rd of July, we published a video entitled $40 Oil Update and New Sanctions Imposed. Again, we place a link below, where we highlighted that, quote, tankers are offloading millions of barrels of Iranian oil into storage tanks at Chinese ports, creating a hoard of crude sitting on the doorstep of the world's biggest buyer, unquote. Again, this video attracted few views, and again we've placed a link below. Now, the creation of these videos is not by accident, but design. Very often we produce them not because we have nothing better to do, but because we believe that a world event or a political action can and will have an impact, if not now, then in the near future, on your and our gold and silver holdings and value. Sometimes we are privy to confidential information, and other times we can calculate or best guess what is going to happen. We give you guides where we can when we are barred from revelation due to any agreements we may have signed. So please, with one or two exceptions, most of our videos are not just reporting what has happened that day or the day before, though it may occasionally seem like that, but it also has what we regard as a prophetic relevance. It is our conjecture at this stage that the Iranian conflict is in its infancy and that there is much more to come. And should this happen, we shall indeed see an impact on precious metal prices. Fortunately, there are a number within the Trump administration calling for the president to exercise restraint. But we have a volatile president and a volatile and desperate Iranian government. So just about anything can happen. Now, this aside, next week we foresee volatility in precious metal prices, but with possibly some downward corrections. But they're unlikely to be significant. And if we are wrong and there is a flip to the upside, again, we're not expecting a significant move. Finally, a brief mention about our Discord channel. We now have over 90 members who are regularly tuning in. If you wish to join Discord, where you can see a range of daily articles, have conversations with us and each other, and can share information, and shortly have access to what will become our weekly Discord chat type webinar, then please go to our website from the link below and join our inner sanctum. Even free, that is, non-paying members can join Discord, as long as you have registered, as we attempt to prevent trolls and saboteurs. But you will obviously have greater access if you are a bronze or silver member. And on that front, we also this past week offered a 50% discount on the first month's membership of our bronze and silver inner sanctum. And again, place both details of the video which highlighted this and the codes you can use in the description below. All that remains is to wish you an enjoyable weekend, and as always, a most prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.